And the market's getting a big lift this morning following the news of Osama bin Laden being killed. The Dow right now up almost 30 points. The NASDAQ up almost 20. S&P up 3 1/3. Larry Glazer, Managing Director with Mayflower Advisors. Mike Wall, CEO of Wall Financial Group, also a new face to CNBC. Gentlemen, good morning.
Good morning.
I'll start with you, Larry. What do you think of this market now? Does the bin Laden news change anything?
Sure. Awful lot of good news getting priced in, Mark. No question, earnings have been outstanding. The Teflon market has been holding up like a champ. We're coming out of April, which is a seasonally terrific period to be invested, getting into a more challenging period. As this market rally matures, it might make sense for investors to be a little bit more defensive while still participating in this market.
Mike, Larry wants to have his cake and eat it too. What about you?
Well, you know, last time I checked, I don't think that's possible. I will say, however, things have changed a little bit, and I think one of the things we still got to be looking at is inflation, interest rates rising, and we got to have some plays for that. You know, I still like the energy sector. There's a lot of growth still, I believe, yet there. In fact, if you look at the last 10 years, you know, what we take a look at is sometimes considered the lost decade in the market, and quite honestly, a little over 11.5% a year with the particular ETF we laid out. I still like emerging markets. I think there's a lot of potential there. And quite honestly, kind of a double play, if you will, to help us with interest rates and things. I like the idea of hedging a little bit with gold, and in addition, shorting the treasuries with an ultra short that shorts 20-year plus, if you will, treasuries. As we know, as interest rates rise, bond values go down. So we want to participate in that. But at the end of the day, we want to make sure we're taking gains off the table as they happen. And we're overall generally a little bit more conservative with our clients, as most of our folks are 50 plus that we're working with.
Larry, if energy prices stay high and companies like McDonald's are passing those prices along to consumers, consumers are 2/3 of our economy. It could hurt our economy. In that situation, would you go short treasuries or would you actually buy them?
No question, Aaron. Well, that clearly is a challenge, and we are in a consumer-driven economy, and clearly we see the potential headwinds of higher commodity and higher energy prices, not only in corporate profit margins, and if they pass those through, it will affect consumer demand. So it's a real challenge as we look ahead. And Aaron, that's one of the reasons that we would focus more on higher quality, high dividend-paying companies. You can do this through an exchange-traded fund. Those are companies that may be better able to pass through these higher costs while still benefiting from the weaker dollar. So there are plenty of opportunities for investors. They need to be more cautious, more defensive, more opportunistic going forward.
Mike, if we do see a slowdown in U.S. economic growth, how do you hedge against that since you're ultra short treasuries and you're already long energy?
Right. Well, I think the biggest thing you need to understand is, first off, these plays are just a piece of the overall portfolio. And, you know, I kind of look at it as, if you remember the old Ron Popeil, set it and forget it. Unfortunately, the reason a lot of people have been in the situation they are financially is because a lot of managers have just kind of set it and forget it. So one of the things that we're looking to do is make sure that we pick these plays, but the plays that we pick, they may not be the same plays 6 months from now, a year from now. So just continually to watch where they are. I think good stocks that are paying dividends definitely are an option in addition. But looking at all the parameters and understanding that what we've just mentioned there is just a piece of the overall picture.
All right, Larry, Mike, thank you both very much.
Thank you.
Appreciate it.